been covering a number of earnings stories this morning, including from TMX Group, the parent company of the TSX. And those results have been well received, better than expected numbers, and a dividend boost by the company. John McKenzie is the CEO of TMX Group, and he joins us here in studio. John, it's nice to see you.
John, thanks for having me.
Let's always start with what's happening with your business. I know I've asked you this a million times, but there is a lot more to the TMX than the TSX. And how did that factor into your quarterly performance?
That's a great way to phrase it, because it's really about a long-term strategy and execution that's playing out in the results. So for years, we've been working out to really build out the franchise, to have more data capabilities, more index capabilities to support the ETF community, globalize the franchise. We're more than 50% of the revenue now outside of Canada, and more than half of the revenue also in recurring revenue parts of the franchise. So it makes the organization a lot more resilient when you've got times of economic turbulence like we've been in the last year and going forward.
You know, it's interesting. We were just talking to one of our friends at Bloomberg about Spotify, and they have all these subscribers, and so you have, you know, a subscriber business. There's an element of that to your business that it's almost, you've got the customers, and it's as you said, recurring revenue in parts of that business.
Well, you're exactly right. If you think about, like, the energy part of our franchise is all subscribers, and we see them renewing and growing every year. Our data business is all subscribers. But even the capital formation business, when you think about 3,000 plus issuers that are listed on our marketplaces, they're like regular subscribers to being on the platform. So it looks a lot like that same type of business.
Yeah. Well, let's talk about how they're feeling right now. I hate to make you the point person for this, but we're sitting here trying to make sense of the world. And I think in the short term, even though, there was obviously just a reprieve on tariffs directed at Canada, you keep hearing about how uncertainty leaves people sitting tight for now. Any sense on what the feeling is, the mood is in corporate Canada like that?
I mean, I think you've got it exactly right that way. And that's the piece that's a bit frustrating, because the underlying conditions for companies to raise money right now are excellent. They're the best they've been in years. We've got, strong valuations in the market. You just talked about the fact that the market's up 20% year over year.
Right.
You've got a lot of capital to deploy. Valuations are good. Interest rates are coming down. So the conditions to raise capital are excellent, but the confidence is the gap. So what we need to see is more good transactions get done. The fact that we saw a good deal for Group Dynamite in the Q4 was positive, because other people can look at that and say, okay, that's something I can build on. On the inside, we keep working on a pipeline of issuers that are private today that could raise public money. We've got 1,600 plus that we're talking to. It's just a question of when for them. So you need to have some positive indicators. And that's the piece that's the most frustrating about everything that's happened this week, is it just raises another question mark on confidence.
This is a bit opinionated, but it's frustrating to me when we have to cover so much of what's happening stateside. It's easy to say there's no innovation here, but literally this morning we spoke to a founder of a AI startup that is putting self-driving vehicles onto the roads in Texas as we speak. So there's a big opportunity to grow a business in this country if you're in the right lane right now. In terms of how you're managing the business then through all of that, right? You're sort of staying in touch with all your stakeholders and figuring things out. But like, what are you focusing on, let's say, for this period of uncertainty, if you will?
And that's when it's even more important to be thinking about the long term. And I always remind people that we've actually been around 173 years. So we're not working quarter by quarter. We're trying to focus on how do you make this market the most competitive for the long term. And that's actually what I worry about a little bit with all the Trump and tariff talk, is that we worry about the symptom and not the long-term problem. So with a marketplace like ours, we keep thinking about, okay, how do we invest in ensuring our trading systems are up to date, efficient? We're putting a new clearing system in place this quarter. So keep investing for the long-term competitiveness of the future. At the same time, let's encourage policymakers to do the same thing.
Let's end on that, because you've been fairly vocal with some targeted policy ideas to help business in this country succeed. I'd be happy to hear you reiterate to our audience what you've been focusing on. I'm just curious how the message is being received as well.
Well, there's a lot more open doors for the message now, as you can imagine.
Okay, good.
I mean, the policy piece is even more important now than it was beforehand, but it's really three simple points. We need to have strong, efficient, and consistent regulation. When you've got regulatory uncertainty, harder to raise capital. We need to have a a regime in Canada where you can permit things predictably. This is the slowest market in the world to bring a new mine to market because of the regulatory side. And by the way, we've got the best critical minerals. So that's a gap we need to close. And the third piece, and probably the most important, we need a tax regime that incentivizes investing and being competitive. So we want to incent taking risk in the country. Raising capital gains taxes was a mistake. We should be thinking about taking the other direction and incent Canadians to invest in Canadian companies now.
Right. I do have to ask you real quickly, because President Trump brought it up as well yesterday, how our banking system works, that American banks, are they allowed to operate in this country? The president says a lot of different things. But what would you say about Bay Street's relationship with Wall Street?
Bay Street and Wall Street are probably the most interconnected capital markets in the world. So I don't know any basis of fact for that comment. There are 16 U.S. banks that are already operating in Canada. The bulk of the participants in the TSX and TMX ecosystem are actually outside of Canada, and they connect directly or through Canadian participants to do that. We have the only markets in the world where you can seamlessly clear across border, and we recognize each other's companies. So there really just is no basis in fact for that comment, and it's an ecosystem we've nurtured over the years, and we should continue to promote it.
Okay, well, let's look forward to that. John, thanks very much. Appreciate it as always. John McKenzie is the CEO of the